This is what Tokyo, the capital of Japan, looked like in the 1940s, and this is what it looks like today. Just a few decades ago, Japan was a war-torn country with a shattered economy and a struggling population trying to rebuild from nothing. Today, the country has completely transformed. It has better infrastructure than most nations in the world. It's producing cutting-edge technology, world-class cars, and electronics that millions of people use every day. In the span of one generation, Japan went from ruins to one of the most developed countries on the planet. But it came with a price. The same forces that built the Japanese economic miracle are now damaging the country from within. Japan has one of the oldest populations in the world, its economy has barely grown in decades, and millions of its people are quietly struggling to survive. So, what was the secret behind Japan's economic miracle? And why are the Japanese now paying for their own success? This is the dark side of Japan's economy. After Japan's defeat in World War II, the country was left in ruins. Entire cities had been reduced to rubble, millions were homeless, and the economy had completely collapsed. Factories that once powered Japan's industrial strength were destroyed or dismantled, and food shortages pushed the population to the edge of survival. But within just a few decades, Japan pulled off one of the most astonishing recoveries in human history. By the 1960s, the country was growing faster than almost anywhere else on Earth, with GDP rising nearly 10% every year. It became known as the Japanese economic miracle. So, what made it possible? A combination of powerful forces, massive support from the United States during the Cold War, close cooperation between government and business, and a national culture built on discipline, precision, and efficiency. Japanese companies like Toyota, Sony, and Panasonic began to dominate global markets. And by the 1980s, Japan wasn't just catching up with the West, it was surpassing it. Tokyo's property values exploded, the stock market became one of the biggest in the world, and some even predicted Japan would soon overtake the United States as the largest economy on Earth. But beneath that incredible success, hidden cracks were already forming, cracks that would eventually reshape Japan forever. After decades of rapid growth, Japan's unstoppable economic engine suddenly collapsed in the early 1990s. But this wasn't a random accident. It was the result of several dangerous choices that built up over time. In the 1980s, Japan's economy was booming. Easy loans and ultra-low interest rates fueled massive speculation in stocks and real estate. Everyone believed prices would keep rising forever. But by 1991, the government, fearing an overheated market, raised interest rates sharply. The bubble burst. Stock prices crashed by over 60%. Real estate lost more than half its value, and banks were left drowning in bad loans they couldn't recover. Instead of letting weak companies fail, the government propped them up, creating zombie firms that stayed alive on cheap credit but stopped innovating. This drained productivity and prevented healthy growth. The result was Japan's lost decades, over 30 years of near-zero growth, falling asset prices, and stagnant wages. The economy that once grew by 10% a year now barely grows by 1%. Japan's story wasn't just about one bubble bursting, it was about a system that couldn't adapt once the miracle ended. Japan's economic boom didn't just create wealth, it also created an extreme work culture that still defines the country today. During the miracle years, Japanese workers became symbols of loyalty and discipline. Companies demanded lifelong dedication, long hours, and total commitment. In return, employees were promised job security and respect. But when the economy crashed, that deal broke down. Today, Japan still has some of the longest working hours in the developed world. Many employees spend 10 to 12 hours a day at the office, often followed by mandatory after-work drinking with colleagues. Leaving before your boss is seen as shameful. The pressure is so intense that Japan has a word for death by overwork, karoshi. Every year, thousands of workers die from stress-related illnesses, heart attacks, or suicide linked to excessive work. At the same time, the younger generation is losing faith in the system their parents built. Stable, lifelong jobs have become rare, and more than 40% of young workers are now in low-paying temporary positions. Many delay marriage or avoid it altogether, contributing to Japan's falling birth rate. This toxic cycle, where people work themselves to exhaustion for an economy that no longer rewards them, has become one of the most visible symbols of Japan's deeper economic and social stagnation. And while overwork and burnout define the younger generation, Japan faces an even bigger problem. There are simply fewer young people left. Japan's most urgent problem today isn't inflation, unemployment, or even slow growth. It's demographics. The country is running out of people. For decades, Japan's birth rate has been falling. In 2023, the number of babies born hit a new record low, just 758,000 compared to over 2 million in the 1970s. Meanwhile, deaths reached 1.5 million, meaning Japan now loses nearly twice as many people as it gains each year. The population has been shrinking for over a decade and is projected to drop from 125 million today to less than 90 million by 2070. By then, nearly 40% of Japanese citizens will be over the age of 65. This demographic collapse has created a quiet crisis across the country. In many rural areas, schools are closing because there are no children left to attend them. Entire villages are disappearing. Japan now has over 8 million vacant homes, many abandoned after their elderly owners passed away, with no one left to inherit them. Economically, the consequences are severe. A shrinking workforce means fewer taxpayers and lower productivity. The government already spends nearly a third of its budget on pensions and healthcare for the elderly, and that number keeps rising. To fill labor gaps, Japan has slowly opened its doors to foreign workers, something once considered unthinkable in a country that prized cultural homogeneity. But even with this change, immigration levels remain low compared to other developed nations. Japan's demographic collapse is not just a population issue, it's an economic time bomb. Every year, there are fewer workers supporting more retirees, fewer consumers driving demand, and fewer young people with hope for the future. Japan's economic slowdown isn't just about fewer people, it's also about falling prices, weak demand, and decades of stagnation. Since the 1990s, Japan has been trapped in what economists call a deflationary spiral, when prices stop rising and instead begin to fall. At first, that might sound like a good thing. Cheaper goods should help consumers, right? But in reality, deflation is one of the most dangerous problems for an economy. When people expect prices to fall, they delay spending. Companies make less money, cut wages, and stop investing. This leads to slower growth, more unemployment, and even lower prices, a cycle that feeds on itself. Japan has been living in that cycle for more than 30 years. After the 1990s asset bubble burst, the Nikkei stock index lost over 60% of its value, and housing prices collapsed by 80% in some areas. Since then, Japan's GDP growth has averaged less than 1% per year, while wages have remained almost flat for decades. In real terms, the average Japanese worker earns less today than they did in the 1990s. Household spending has fallen and productivity growth has stalled. Even massive government stimulus programs, including zero interest rates and quantitative easing, haven't been able to revive sustained growth. Meanwhile, Japan's national debt has exploded to over 250% of GDP, the highest in the world. Yet despite this mountain of debt, inflation remains low because people still aren't spending. The population is aging, demand is shrinking, and consumers are saving more than they buy. Deflation has quietly reshaped Japan's economy into one that's cautious, risk-averse, and dependent on government support. It's a country where banks sit on piles of cash, companies hesitate to raise wages, and people fear the future more than they invest in it. Beyond Tokyo's neon skyline and Osaka's bustling streets, a very different Japan exists, one that's slowly fading away. Across the countryside, thousands of small towns and villages are emptying out. Young people have moved to the cities in search of jobs and opportunities, leaving behind aging parents and abandoned homes. This rural exodus has become one of Japan's quietest but most visible crises. Today, nearly half of all Japanese municipalities are officially classified as depopulating. Over 8 million homes sit vacant across the country. many slowly collapsing, overtaken by nature. Some villages have so few residents left that local schools, hospitals, and even grocery stores have closed permanently. In Nagoro, a small village in Tokushima Prefecture, there are no children left. Instead, life-size dolls now fill the empty classrooms and benches, a haunting symbol of Japan's demographic decline. This problem extends far beyond nostalgia. When rural areas die, local economies disappear with them, agriculture declines, regional industries vanish, and traditional communities dissolve. The government has tried to revive these areas through relocation programs, subsidies, and tourism campaigns, but the trend has continued for decades. Japan's infrastructure, from roads to public transport, was built for a much larger population. Now, maintaining it for a shrinking and aging one is becoming unsustainable. These ghost towns are not isolated tragedies. They are the physical evidence of Japan's deeper economic crisis, one built on decades of stagnation, aging, and inequality between urban and rural life. Japan's story is one of the greatest economic miracles in history, a nation that rose from ashes to become a global powerhouse. But behind that success lies a quieter struggle: an aging population, stagnant growth, overworked citizens, and entire towns fading into memory. The same forces that once built Japan's prosperity are now testing its resilience. And as the country searches for a way forward, the question remains: can Japan reinvent itself once again, or will its greatest strength become its biggest weakness?